The best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin, Jeong. Singapore's equity market is at an interesting crossroads. With the Monetary Authority of Singapore's new $5 billion equity market development program, there's renewed focus on boosting liquidity, enhancing valuations, and attracting investor participation. At the same time, both fundamental and technical signals are pointing to potential opportunities and challenges for investors navigating this landscape. In today's discussion, we're joined by two experts from CGS International Securities Singapore. We have Khee, Deputy Group Head of Research and Head of Research for Singapore, who will share her insights on market fundamentals, sector themes, and stock selection, as well as Chua, who is a CMT, a technical analyst, who will walk us through momentum trends, chart patterns, and practical trading strategies. Khee and Weiren, welcome to the show.
Hello.
Hello.
Thank you so
for
much.
Us.
Thank you so much for joining us. Well, let's talk about the $5 billion equity market development program. Khee, how do you perceive the potential impact of the EQDP on Singapore's equity market, particularly concerning liquidity and valuation improvements?
The market turnover has really improved since the announcement of EQDP in June. We saw that liquidity did start to improve from July in anticipation of the fund being deployed. So when we look at the ADTV, it has actually gone up by about 9 to 10% month-on-month since July. So another way to look at Singapore market, I think valuation has also started to rise with the EQDP in anticipation of that.
Well, I believe the CGS International Research Team has identified 23 stocks that are undervalued based on traditional metrics like the PE and the PBV ratios. So what fundamental factors, Khee, do you consider when screening for investment opportunities, and how do you assess the intrinsic value of these stocks?
When we came out with this report called A to Z chart book, our genesis was to look at the fundamental as well as technical. So fundamental-wise, we look at thematic, catalyst, earnings growth, what sector they are in, whether they have dividend or contract or order book. And then we screen through together with technical to see what the stocks that are below book and also below certain PE.
Okay. Well, the same 23 stocks have shown bullish technical indicators suggesting potential for upward momentum. So Weiren, from a technical analysis standpoint here, what chart patterns or indicators are you observing in these stocks that suggest a sustained uptrend?
Okay, thanks for the question. So chart pattern-wise is very simple. Try to go as simple as possible, like your basic trend line and then your channels. So look out for like corrective kind of patterns like your bullish flag, your pennant, your triangles. The smaller, the better. So it can show that there's actually a correction and the major bullish trend is on the upside. All right. As for the indicators, I would like to put in some time on to explain it. So for indicators, I break down into three parts: long-term, mid-term, and short-term. So for my long-term, I use moving average convergence divergence. So this one really smoothed out the longer-term signal, so not to have any noise. And instead of using a default setting that your chart or your terminal that are provided. So and then I move on to stochastic. So why stochastic is because stochastic oscillator actually is a very good momentum-based indicator that shows you very good defined overbought, oversold level, that you can know that by reading this overbought, oversold level, and then you confluence with the chart, sees that is the chart looking at a severe correction, sell down, coincide with the overbought signal, or there is overbought signal but the correction is mild. So it means that if the correction is mild, means that there is still likely very strong room to run for the particular stock. And then, of course, we have to look for a short term to get the best entry price you can. So there will be a rate of change. So what does simply put rate of change, as the name suggests, is observe a period of prices changing and then doing some calculation. So I wouldn't go into the calculation itself. So and then there's above the 0.9 is positive. So positive changes will tell you that the stock is in play. And then lastly, I think you really need to look at volume, because volume is so important that it tells you how, like, is this particular equities in play? Is this highly traded? Is this, and then where's the location of the price? If it's near the bottom or is bottoming up, showing strong volume, that means that this stock is likely to be reversing to the upside.
Right. Well, we're getting some great tips from an expert here. I mean, investors often face the challenges of, aligning technical momentum and fundamental value when making investment decisions. So, Khee, how do you balance technical momentum with fundamental value then when screening for investment opportunities? And what role does each play in your decision-making process?
Fundamental is key. We start off looking at whether we want to cover or write on a certain company based on whether there's any positive outlook of the company, so that the fundamental will support our thesis. Then technical is actually often used as a check, or I would say a safety net for the fundamental analyst. So we usually try to sync our thesis and not go against each other in our call. So I would say that it's a check and balance. Yeah, but we always start with fundamental when we cover a stock.
Okay. Well, short-term momentum can sometimes lead to longer-term uptrends if supported by strong fundamentals and market conditions. So, Wei-Ren, what technical signals or patterns do you look for that indicate a short-term uptrend, that could evolve into a longer-term rally?
Okay, so to put it simply, I would look for stocks as like undervalued or way oversold at the bottom, and where volumes are picking up. So this is a clear sign that this stock is cheap enough to actually come back in play, and especially if my midterm stochastic is showing an overbought signal. So I could really go in and come up, and then I say this stock may be in play and it may reverse to the upside. So that is the one. So other than chart patterns, you can look at like your classical inverted head and shoulder, your double bottom, your double top, etc. These are very basic patterns that we look at. There are some complex patterns like diamond bottoms. Coincide with the indicators of overbought and strong volume. This could be the one that could evolve in a longer term rally. And then once the trend reaches into a mid stage, we could look for like your small time correction. Like what I mentioned when you first asked me the question, I'll look for overbought. Is it overbought? How strong the correction is. So this is like what if. And then of course, like I want to reiterate like what Siew says early on, the fundamental must be really in play. So it really drives down that no matter how good the signal is, if there's no fundamental play, this stock is basically going to be quote unquote dead.
All right. Well, strong balance sheets and attractive dividend yields are often indicative of a company's financial health and can influence investor confidence. So, Khee, how important are factors like balance sheet strength and dividend yield in building conviction for these stocks, and how do they affect your investment thesis?
It is important to look at balance sheet for stocks as well as the dividend yield that they pay. But I think earnings growth, midterm, short-term earnings growth is also very important. And another thing that we often consider would be management quality, as well as their plan on how to grow or scale the companies. I think finally, secular trend is something that is also very important to consider when you want to actually invest in a stock, whether the company will still be around 10 years down the road.
Right. And also establishing clear entry and exit points is crucial, especially in volatile markets, to manage risk and capitalize on potential gains. So, Wei-Ren, what technical indicators or strategies do you employ to determine optimal, entry points, stop losses, and target prices in the current market environment?
Okay, so for entry pricing, it really depends on circumstances. Like, for example, if this particular asset class or this counter having a strong rally already. So at this point of time, it's near it breaking above an all-time high. So the next question is you need to check whether it's overbought. Is the volume still healthy? Is the trend momentum, the long-term MACD still intact? If it's still strongly intact, yes, it could go on for a while. But however, short-term, if you are risk-averse investors or traders, one could always look for a pullback to the next nearest support level. There is it could be a previous new high, or you can just use a measurement of the swing high to swing low. You can use 38% of the total retracement or 50% of the total retracement. It depends, and then look for confluence level near near to the support level. That's the optimal entry price. And target price, stop loss is normally I will just be more, give more room. So because you do need to factor in whipsaw due to special announcement, special macro environment, etc. As well. And target prices more flexible. Sometimes I will use this thing called Fibonacci expansion. So it basically is from this point 1 to 0.1, 0.2, very low, very high, and then the correction point, and then you plot it out like 1-to-1, and that's the near-term target price that I look at it. Of course, if before reaching the near-term target price, there's an overbought signal, volume start to die down, so investor could make this choice is, hey, should I just trim my position or exit the position correctly? So it depends on what's your risk appetite and how risk averse you are.
Definitely. Well, I mean, many of the identified undervalued stocks are concentrated in specific sectors, which may pose diversification challenges here. So, Siew, given the concentration of value names in certain sectors, how should investors approach diversification without compromising potential returns then?
I think one should not over-invest in one sector. For instance, we know that Singapore is spending quite a fair bit on infrastructure, and so construction-related names would be a darling right now. But I think we should also just diversify our investment into beyond construction sector, like consumer REITs, or any companies that have recurring earnings. So in investing, I think we can balance our portfolio with cyclical names as well as yield play with earnings growth and recurring earnings kind of portfolio combo.
Well, then comparing Singapore's equity market with regional peers can also provide insights into relative value and investment opportunities. So how does Singapore's equity market compare with regional peers then in terms of value opportunities, and what factors contribute to these differences, Siew?
Relative to our regional peers, I think our advantage would be our currency. So that's a safe haven for many of the institutional shareholders. PE-wise, I think we're not too expensive at about 13 times forward with a little bit of earnings growth going into next year. I think the key difference this time would be MAS support to ensure that the market's longevity is actually sustained and it's not one-time wonder.
Right. And looking ahead as well, wherein what key strategies or considerations should investors keep in mind when navigating the current market landscape?
Okay, so strategies-wise, I think we could look at, first thing, we need to look from top to bottom. Your macro news, like yesterday was the Fed FOMC, so you really need to look at that because that affects not the region, but the whole global landscape. And which bring me to our next point is looking where the money is going. So like example, some money are flowing to, that's why start of year, money is flowing very heavily into the Singapore market. That's why we have the A to Z chart book together with Siew, because money is always looking for the next alpha to generate more alpha ahead. So that's point number one. So point number two, I would like to say is the trend is your friend. So follow the trend. So don't always buy at the bottom without just say, okay, there's a large sell off that, I think the market is reaching the support, I will buy it at that level. Don't do that because you need other indicators to do a confluence and a confirmation for that. Because if you don't do that, you'll be like catching a falling knife. And if you catch wrongly, your hands will be hurt. And then consideration also your optimal risk profile, your position sizing. So if you want to buy at the top, then your position sizing should be kept small because you're factoring a large risk that it might correct aggressively potentially.
All right, some great insights from the both of you. Thank you so much for joining me today. That was Lim Siew Khee, Deputy Group Head of Research and Head of Research for Singapore at CGS International, as well as Chua, CMT, Technical Analyst at CGS International Securities Singapore. This has been The Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.